Hello and welcome back to goldstocktrades.com. It's been a while since we've had a new guest with us because of the gold market and the recent rise in the dollar. But we have a new company with us that's at a very exciting period, and I believe that we've gone through a serious correction, and it's the time now to look for quality projects at the right timing of the life cycle of a miner. If you look at the Lassonde curve, today we have with us John Darch and Ken McLeod, experienced business and mining and a mining engineer. They are at a very important point in the story of their current company, Sonoro Gold, which can be traded as SGO on the TSX Venture and as SMOFF. Am I correct on the US OTC? And they're at an interesting point right now because they could be on the verge of financing with possibly a partner, or with potential offtake. You've come out with a PEA in the past year. You're in a very important mining jurisdiction where there's been new mines that have come into production. So before we discuss where you are in the life cycle, I'd like to really introduce you and John and your partnership and your experience, because that is so important, and the experience of the team at Sonoro Gold, where you have two gentlemen with over a few gentlemen with over 40 years experience of putting mines into production, and this is a mine that looks like it could, from the last PEA, has some qualities that could get this into production and get the financing potentially to start commissioning of this mine in 2023. So Ken, if you can give an introduction of your background as a mining engineer and your work with John in bringing value to shareholders.
Thank you, Jeb. It's a real pleasure to be chatting with you today. I think we'll start off with just making a slight change to your introduction there. I'm not a mining engineer, I was a mechanical engineer. But in the early 1980s, I decided to forsake engineering, get into what at that time was a much more interesting profession. That was oil and gas exploration and development in the United States. And from there, I evolved into mining in Canada and the United States. And then in the latter part of the 80s, back into oil and gas by developing an offshore field on the west side of the offshore Palawan Island in the Philippines. And my company actually drilled the world's first horizontal completion well. And so from there, that company moved on to eventually to the New York Stock Exchange. And then in the 1990s, I got involved in the Congo. Well, my mining company was the first foreign mining company to sign an agreement with Mobutu before he was ousted from power in the Democratic Republic of Congo. At that time, it was called Zaire. And then, so we were developing a copper cobalt tailings and hard rock project in Katanga province. And then in 2001, John and I got together. We launched a geothermal energy company, first in Canada and then in the United States. And that was a successful venture that was taken over in 2009. And then I set up a private company in the Philippines to develop renewable energy in the Philippines. And that was sold to a large company in 2014. And I became president and CEO of Sonora Gold at that time. And it's been my sole focus ever since. And it's been a very, very complementary team that we have put together. We've got just a magnificent team in Mexico, and John and I have been working seamlessly now for the past 4 years on developing Sonoro and taking this project through from the first phase of drilling to where it is now, 3.5 years later, and we've made a decision to head towards production.
Well, that's an exciting decision to head towards production. And because if you study the life cycle of the Lassonde curve, you have the discovery stage where it seems that you've already have gone through that stage, and then you have an orphan period. But then when you get the potential mine financing and you move ahead into production and construction and commissioning, that's where you see the second potential value creation with the life cycle of a miner. So you think that you're on this verge of production?
Oh, we thoroughly believe we're on the verge of production. I'll harken back to a day about early 2018 when I stood on this project site as we were starting to sign up the leases, which now comprise the Cerro Caliche property. And our geologist, Mel Herdrick, and our mining engineer, Jorge Diaz, were standing there and we're looking, and Mel's assertion was, I believe there's at least 1 million ounces on this property here based upon his knowledge of, his prior knowledge of the property. And the potential is for up to 2 million ounces. So we've been working hard over the past 3.5 years now to bring this to fruition. And the PEA that we put together last year, which in October of 2021, it illustrated very close to 500,000 ounces of mineable material at that point. And of this, it worked out to 440,000 mineable ounces with an average grade of 0.41 grams of gold. There's a little bit of silver on top of that as well, but it's 98% gold dominant. And so we are very, very much of the opinion that we're well underway now towards achieving our initial goal of 1 million ounces. We believe that the avenues are open for us to achieve that over the coming year and a half, and keep on drilling beyond that point to bring us up to what we believe is the ultimate, the target for the project, which is as much as 2 million ounces. But to get there, we've decided that we want to be in production as soon as possible. In other words, we are very, very concerned about dilution to the existing shareholders and future shareholders as well. So we've made a decision to go towards production. And we've submitted the environmental permit as of May of this year, with the expectation that we will get approval on the environmental permit to construct the mine sometime in the latter part of 2022. It's somewhere between October and December is our estimation right now. And so once that is in place, we have been working very diligently over the past 2 years now with a potential lender that is a preferred lender, although there are other avenues available to us for financing as well, with a view to securing project finance at the time that we secure the environmental permit from the environmental agency, SEMERNAT, and then go into construction, hopefully by the end of this year, with the intent of being in production by the end of 2023. So that's been the goal. We've had that vision now for a couple of years. It is coming to fruition. And we believe very strongly that if the gold price remains where it is or better, that it is very, very financeable. If gold does suffer a further decline from where it is today, it makes it harder, of course, to raise the capital. But we don't believe it's an impossible task, because we in the industry don't look at where gold is going to be next week or next year, for that matter. It's where's it going to be 5 and 10 years down the line. And so we feel very strongly that the project is financeable, and that we will continue to bring this project through to its inevitable conclusion, which we believe is production by the end of next year.
And it's important that we discuss the difference between your project, the Sonora Gold Project, versus other mines that have recently come into production, have had a lot of challenges with underground mining. But this is an open pit, heap leach amenable mine. So the technical risks, in which you have an engineering background, you can maybe discuss this with investors. The technical risks are different than some of these other mines that have come into production, have had really issues with grade control and like up in Canada, Red Lake area. The difference between this project and those projects.
Oh, there's a huge difference between the two. First of all, this is an open pit heap leach project. Multiple projects exist in northern Mexico, in fact, throughout Mexico, very successfully. And the grade, while the grade is important, it is not a killer to projects that have lower grade. In fact, some of our peers in Mexico, such as Fresnillo, which is a large Mexican conglomerate, have been mining at the Herradura mine with a cutoff grade of down to 0.1 gram. And so if you can make it work down to 0.1 gram cutoff, then obviously on a large scale, and moving a lot of tonnage, you can make a significant profit for your shareholders. But we are looking at a project right now that is at least somewhere between 0.4 and 0.5 grams. And it is, according to our estimations, regardless of whether the price of gold is 1,800 or 17 or maybe even 1,600, it is, according to our estimates, it has all the makings of a successful project, which would yield a good return to the shareholders. And keep in mind that we decided 3 years ago to aim for an open pit heap leach mine because of the lower degree of risk involved. And there's a potential for deeper resource, a potential for deeper, higher grade resource. We believe that strongly that there is that potential because the gold has to come from somewhere down below. And the deeper you go, of course, the greater the potential for finding higher grades, but also the greater risk. So we focused on developing the near surface, which is somewhere in between surface and 70 meters of true depth, to develop this large open pitable heap leach oxide deposit. And it's been very, very successful for us. We've now demonstrated, like I mentioned before, 440,000 mineable ounces. There's another 7,200 meters of drilling that is being analyzed right now, which hopefully should increase the resource as well. And interestingly enough, the grade of this recent drilling is significantly higher than the grades that we've been encountering in other parts of the concession as well. So to summarize on the value of developing an open pit heap leach mine of this nature here, think of it really as a large gravel operation, just a gravel pit that's producing as a bonus gold instead of just crushed rock, crushed aggregate. And so the sequence of events is you go in, you mine the areas that have already been demonstrated to be mineralized. You truck the rock to a crusher. It goes through a crushing system, goes by a conveyor belt onto the heap leach, where you sprinkle the cyanide on, and the solution is then taken to a chemical plant that is then separates the gold, and you either produce doré or you produce carbon, which is then refined further at that point. So it's not a very, very labor intensive. Well, it's labor intensive from the point you have to mine the material, but it has a lesser degree of employees per ounce than you would on a comparable underground mine, for example.
Yes, and that's where we've seen some mines that have recently come into production have some trouble is the underground situations, and that's why it's so important to look at grade, but also look at the mining method and the engineering and the geometry and the near surface, and which heap leach gold oxide is one of the best ways to go here.
I think if I can add on to that, Jeb, the average grade that we currently have, it's in the order of zero point 0.4 grams to zero point 0.5 grams. And yeah, if you had an underground mine, if you were contemplating an underground mine, you would not be able to make money at that grade. You would need significantly higher grade than that. But what we're finding very interesting is in some of the recent drilling we've accomplished at what is known as the Colorado zone, and also Cabeza Blanca zone and the Guadalupe zone. These zones have been yielding higher grades. Where the average throughout the concession has been 0.41 grams, we're getting significantly higher intercepts in the Colorado zone especially. So we believe that there's a potential there for higher grades at depth. And eventually we will get to these regions where the higher grades are evident, and hopefully we'll be able to go deeper and be able to demonstrate the continuation of the higher grades to depth. But what we find truly interesting is there's a neighboring mine called the Mercedes mine, which is 8 kilometers on the same structure,
That's
on the same
Bear Creek, right?
Bear Creek mining, and it's essentially on the same structure as we are. It's a low sulfidation epithermal system, 8 kilometers away, and the resource at the Mercedes mine is located 350 meters below the surface. And the kind of intercepts that we've been achieving recently at the Colorado zone, and these are intercepts of up to 20, 30, 40 grams per ton. And yeah, that's what you would expect to find 300 meters below surface at the Mercedes mine, whereas we're finding these intercepts close to surface, 50, 60 meters below surface. So that's still open pitable. And so that makes us feel, that, hopefully in the next edition of the resource estimation, that we will be able to increase the average grade. So that's a possibility. But certainly we should be able to add more ounces to the resource. And the expectation now is that we will complete the next resource estimation by the end of August, and probably announce it the first week of September is the likeliest right now by the time it's ready for publication.
Okay, so end of August, you heard it. We will get an updated resource with some of that excellent drilling that you've had from this Colorado area. So that's pretty exciting for Labor Day weekend. So we will be looking forward to that, Ken. Let's talk about inflation right now, because when you're building a mine, you have to deal with the sky. Right now we're seeing the highest inflation, as high as CPI that we've seen in my lifetime in more than 4 decades, and that's why they've been hiking interest rates, because inflation has gone way out of it to a new extreme, and that's important when you're constructing a mine. What risks do you see, and why is the benefit for investors to look at maybe Sonora, Mexico versus some of the other areas like Canada? Or like right now I see in Canada the costs are skyrocketing for the miners, and the producers. So if you could maybe highlight what the benefit is working in Sonora, Mexico. I know there's a lot of mine construction going on in the region. There's a lot of local labor. I know that some of the big majors, like you mentioned, Bear Creek, there's others like Alamos is in the area, and I think Agnico Eagle has a big mine. How are they dealing with the costs?
Well, everybody has to attend to the increased costs on capital. First of all, on the capital, because interest rates are higher. And secondly, the cost of steel has definitely gone up. We've seen increases everywhere from 10% to 20%. And that will certainly affect us. There's no doubt about that. But recently, what we have done is the original edition of the Preliminary Economic Assessment, or PEA, was published last October. And then we had an updated PEA about 3 weeks ago. That was sometime in the early June, as I recall. And then we went ahead and we assessed the difference in costs. And we were able to, through mine optimization, to be able to streamline the operation from initially, for example, we were going to start out at 15,000 tons per day, but through optimization, we were able to utilize higher grades in the property and be able to maintain a similar level of production in the way of, by order of 45,000 ounces a year, approximately, was what we were targeting for. And our estimates are exactly in that ballpark. So we were able to keep the grade high in the first 3 years, which enabled us then to get an earlier recovery on the capital. So the capital recovery is just over 2 years. And that's based upon the fact that steel prices have gone up, but our mine optimization has streamlined the process. So instead of 15,000 tons a day from day one, we start off at 8,000 tons per day, increasing to 15,000 tons in year 3. And so the capital cost for increasing the production in year 3 is partially offset, of course, by the fact that we'll be in production. So it's money will be, or the capital will be funded by the revenue from the mine. And so other factors that we've looked at was, okay, instead of taking the leach pad and building the entire leach pad from day one, we built 50% of the leach pad prior to production. And then through the revenue generation from production, we'll be able to fund the remaining half of the leach pad in year 3. And so these are elements that enabled us to bring the capital costs down, and along with other factors as well. On the operational side, we were able to cut down the length of travel for the waste trucks to go. We've relocated the waste dumps, and so there are many, many things that we have done in order to cut down on the capital cost, cut down on the operating cost, and enable the project to be much more streamlined. Thereby, I feel very, very strongly that going forward now, that there are other elements that we can bring to bear, such as leasing the crushers, for example. We have getting multiple opportunities from the crusher manufacturers and distributors to lease the crusher. That takes a burden of the upfront cost for the capital. And dealing with the crusher manufacturers, of course, means that you're getting a better interest rate than you would by going to the mining funding agencies. So there are many other things that we can look at and have been looking at to cut down on these capital costs and make the project even more economically viable. But as it stands right now, at a gold price of $1,750, we're looking at a payback of 2 years, like I mentioned, and a cost per ounce of $1,200. And now, can we get that reduced going forward? We're working hard to achieve that, get it reduced so that the spread between cost per ounce and the gold price becomes less material if we are able to keep reducing the cost per ounce to produce.
Ken, we're running out of time now, but I'd like you to comment permitting risk. I know that recently an important heap leach mine in Chile just was at the environmental impact stage and was declined, and that was a big heap leach 5 million ounce gold project. Can we see that in Sonora, or is that unlikely to happen for Sonora Gold, be declined environmental permitting for this project?
Brilliant question. it is the key element for moving forward, getting into production for next year. We believe strongly that there are no environmental, social, or political impediments to getting the environmental permit in place. And then for many, many reasons. We're surrounded by producing mines. You know, we've got Agnico Eagle's soon to be a producing Santa Gertrudis project. Adjacent to us in the west is the Cerro Prieto mine. To the southeast is the Mercedes mine, and a little to the west again is the San Francisco mine. So we're in good company in that regard. Sonora State produces almost 40% of the gold that is mined in Mexico, and therefore its economy is reliant on gold mining and silver as well to a great extent. So other aspects are we are 14 kilometers from the nearest habitation, and so we're not infringing on anybody's backyard. We are on a ranch in which the rancher has already leased out area for the Cerro Prieto mine. And there's a great degree of cooperation between us and the rancher. So we don't see any issues with vegetation. We've done an environmental study that shows there are no endangered species or vegetation on the concession. Water supply is in abundance in the aquifer below the massive aquifer under the concession. Electrical power is available about 24 kilometers away. And so as it stands right now, we believe that the state of Sonora itself is very supportive of our project. And we've had discussions with numerous people at the state level, which show that you know, we are a project that is to be supported by the state. And they're now bringing their collective weight to bear on making sure that it proceeds through SEMARNAT, the environmental agency, as rapidly as possible.
Well, today we have an introduction with Ken McLeod, John Darch, the management team. We'll talk to John more in the next interview. We're going to hear a lot more, hopefully, this summer. We have a resource update in August. We hope that to hear progress possibly with mine financing. Hopefully they'll see the value in this project right now, and we'll see some institutions get involved. We've seen that in the past with Cisco and Alamos and the majors getting involved with juniors. So we expect this experienced team to have good news going forward. We will hope to keep you updated. Go to Sonoro Gold, SONORO Gold.com. You can download the presentation there. You can also call 604-632-1764 and ask to make a meeting with either John or Ken if you'd like to discuss Sonoro Gold, which can be traded as SGO on the TSX Venture. It also, for Americans on the OTCQB, it could be traded as SMOFF. Thank you, Ken, for being here with us today.
Thank you, Jeb. A real pleasure.